Also, the other big focus that we have this morning is the 50 days of demonetization that comes to an end today. To talk more about that, we have Pranab Sen, the former Principal Advisor and Planning Commission, who joins us now. Dr. Sen, thank you so much for joining us this morning and taking the time out. What has your assessment been so far? You know, we're getting a lot of mixed reviews. There is a lot of rural distress that people are talking about. There's a big cash crunch that still continues. But how do you think the government will take it from here?
Well, there are, I think, two dimensions to what the government does. One is, of course, that, politically they will have to put a positive spin to what's happening, and I think that process is already on. But, having spent many, many years as a policy economist, we've always worked on one credo, and that was that plan for the worst and hope for a pleasant surprise. I hope the government is doing that because much of what you're seeing, I think, is really for public consumption, and we don't quite know what's happening in the insides of RBI and the Finance Ministry.
No, that's really true, sir. The extent of transparency in the Reserve Bank has gone down considerably. As well, we do not know whether Mr. Modi has something up his sleeve. But tell us what you know best, and better than all of us, better than all the economists. How is the impact on the GDP? Line by line entry, you're able to make the calculation. Agriculture, mining, industry, services, construction, financial services, public health. Line by line, will demonetization take away 1 percentage point from the GDP, 0.5% from the GDP? What's your assessment?
Well, Lata, it's difficult to say. Let me put it this way. As far as the current quarter is concerned, agriculture will actually show strong positive growth because the Kharif output was very good. And, the impact that has been felt has been essentially on prices and realizations. But that doesn't come into the GDP calculation. It's really based on production. The second quarter, the last quarter of this fiscal, I again don't expect too much effect on the GDP estimates because it goes essentially by the Rabi sowing, and the Rabi sowing has been kind of okay so far. So on agriculture, you shouldn't expect to see any obvious effect of the demonetization, at least in the GDP figures, because the GDP figures work on a completely different basis. But whether or not those GDP figures means that there is no rural distress would be wrong. I mean, I think rural distress is very real, but the GDP won't show up. As far as manufacturing is concerned, again, at the moment, all the GDP estimates are essentially based on the results that are coming from the organized sector. Is either based on the corporate returns filed with SEBI, or it's based on the IIP, which are all about the larger components of manufacturing. And the big impact of demonetization, at least in the first round, has essentially been on the smaller units, particularly the informal sector units. And that data you're not going to get for a while yet. So in terms of these two large components where demonetization has had an effect, I don't think you're going to get the data.
No, but there is
positive story will come out.
Dr. Sen, actually, my doubt was with construction. We hear widespread anecdotal evidence that construction has come to a standstill or has slowed considerably. Contract workers, migrant workers have been asked to go home. And the other thing I wanted was in services, which I think you were going to come to, financial services. Are they going to is it based on deposit growth or is it based on loan growth? Because loan growth is zero, but deposit growth is phenomenal.
Yeah. No, it's actually based on the gross margins that the financial sector gets from the deposits and the loans, right? And so my sense is that you're going to see a contraction there. But as far as construction is concerned, look, construction wasn't doing anything very much all of last year. So, we were talking about growth which is pretty close to, 1 or 2% at best. It will certainly be impacted. But again, you must remember that construction is calculated indirectly. We don't directly measure what's happening in construction. We measure what's happening in the inputs into construction, so steel, cement, and so on. And then you build up an estimate of the construction activity from that data. Now, so far as that is concerned, I don't really know because we haven't had the offtake from steel and cement information coming in as yet.
I just had one follow-up to the point you were making about growth, Dr. Sen, because, you know, a lot of people believe that this demonetization impact could last through Jan and February, and every month that demonetization hits, the costs could be almost about 0.3 to 0.5% of GDP. If that really takes place, how much lower do you think FY17 and FY18 GDP could be? Are we looking at, say, 6.5%, 6.8, 6.9? What are you factoring in for both FY17 and 18?
Well, you know, I think the replacement process has been a little faster than I had estimated. My original computation was that if it took 3 months for full remonetization, the impact would be about 1 percentage point, which would make it about 6.5, 6.6 for the current fiscal. That seems to be pretty much on track. My worst case scenario is that it would take 10 months, which some people who knew about the printing activity was concerned. Had it been a 10-month process, then we would be looking at something closer to a 3 percentage point decline.
Okay. Well, I'll tell you two pieces of anecdotal evidence we got. Okay, first the motor cars and the cement sales, which we get in advance. Two-wheeler sales have seen some 20% distress in both November and December, we are told. Likewise, trucks, commercial vehicles. Likewise, cement. In fact, the cement guys were talking about a 5% contraction in the second half, which means for the full year, they are expecting it to be -1 or 0. That's factored in your 6.6?
Well, yeah, part of that would come into that 6.5, 6.6. But, you know, as I said, that much of this also depends upon how disruptive this is in terms of companies closing down. On that, we don't really have very much information as yet. If companies do close down, then the continuity assumptions that one makes in making these calculations completely breaks down. And then the effect could be a lot worse. But that's something we'll know later. So if I looked at what the Reserve Bank did in terms of the financial stability report and conducted stress tests, you know, again, it suffers from the same problem that my calculations suffer from, which is they assume a certain degree of continuity. They don't assume disruptions. And so now if you look at the stress tests, they don't look too bad. But if one looks at the anecdotal evidence of distress in rural areas and in the informal sector, you know, you could be looking at bank NPAs going up by an additional 7 to 8%.
Yeah, that is their adverse scenario. They have a baseline, a medium, and a deep stress scenario.
The adverse scenario is still only 12.5%.
Yeah, that's the baseline. I agree, sir. Just a final question to you. You still observe the micros better for a longer period than anybody else I know. What is your gut? Is this going to be disruptive enough for at least some part of the economy, you know, like construction? We are told that, construction, especially residential and commercial, in large pockets has come to a standstill and is unlikely to go because that is a cash and, in fact, a black money economy. It is good if that comes to a close, but separately, there is going to be immediate hurt. So what's your gut about FY18?
You know, I'm not sure construction is really a haven for black money. What is certainly a haven for black money are secondary transactions in real estate. On the primary side, which is where construction is, I'm not certain that there's a whole lot of black money that's floating around there. So let's get that clear. But the fact is that when you're talking about additions to any asset, the transactions in the secondary market are extremely important in terms of the desire to construct new edifices. And therefore, they can take a serious demand side hit, not because there's too much black money floating around there, but simply because transactions in the secondary sector are not going to happen for a while.
All right. Yeah, so sentiment will rule the roost. Dr. Sen, it's always been a pleasure having you with us all through this year. Have a great 2017 yourself, sir.
You too. A very happy new year to you.
Okay. Thank you, sir. That's the word coming in from Dr. Pranab Sen. But let's